Meta, let's talk about this one. First off, revenue by geography. I like to look at each geography and see if those geographies are healthy or if it's only one's healthy, one's bad. For instance, like Starbucks. Starbucks business is not a disaster in the US. International Starbucks business is in a complete free fall right now, right? And so every company I ever look into or I own, I want to see what's going on in specific areas if it's an international company like Meta is, right? $16.8 billion of revenue they just did in US and Canada, 14.4 they did in the same quarter last year, 17.3 in the same quarter last year, they did 9.3 in Europe, so Europe's, up almost $2 billion year over year, that's incredible, especially considering the European economy is not that strong right now. Asia Pacific, they just did $7.8 billion versus 6.5 in the same quarter last year. This same quarter last year, they did $3.7 billion versus $5 billion in rest of the world. Every single geography is insanely strong for Meta, despite all the inflation, despite all the challenges in the economy in these different areas, right? Meta is still putting up great numbers quarter in and quarter out. Now, something no one looks at it. I know everybody, CNBC wants to put on there, Reality Labs, they lost so much money. But did anybody look and see how much that business is actually growing? It actually is pretty extraordinary. $276 million it did of Reality Labs revenue in this same quarter last year, right? And they just did $353 million, which was 27% growth. So I know that business kind of gets laughed at, but it is actually growing pretty nicely right now, right? Now, if we go ahead and take a peek at this, net income, $13.4 billion versus $7.7 billion the same quarter last year. Their net income's flying 70% up year over year. Diluted EPS, $2.98 versus $5.16 they did. Now, if you watch my Twitch live stream, I told you guys I thought they were likely going to come in with a 5 number, something with a 5 in front of it. Analysts were about 478. And I said that number is likely too low. They're probably going to have a 5 in front of it. And sure enough, they came through 516. Very good number as far as that goes. CapEx, they're spending a fortune on the NVIDIA chips. Obviously, everybody knows that, right? $15 billion plus they've spent so far this year. That's versus 13.4. Now, keep in mind, not all that number goes to NVIDIA, but a huge portion of that number literally goes directly to NVIDIA's pockets, essentially, right? And keep in mind that number is likely going to be even higher in 2025, which is great news if you own NVIDIA stock, right? Family daily active people, 3.07 billion in the same quarter last year. They just did 3.27 billion. So, they're up about 200 million more people are using at least one of their products, which keep in mind, they own Facebook, they own Instagram, and they own WhatsApp. Now, if we go ahead and look at family average revenue per user, very strong. They went from $10.42 of per user back in the same quarter last year. They just did almost $12, $11.89. Very good. Very good. Ad impressions is one thing that is down quite significantly as far as a percent growth on a year-over-year basis. They got 10% ad impressions were up year-over-year, but that's much lower than it was previously. So it's just basically ads being shown out there. However, the price for ads being shown is going up rapidly right now. Absolutely rapidly. Something Meta's doing, maybe they're showing a little less ads to folks to make the consumer experience a little better, right? Or not increasing as much, let's call it that, the ad load, but they're making everybody pay a lot more. That might be something that's actually happening here, right? Because look at this. Average price paid per ad, year over year percentage change. It was up 10%. 10% on a worldwide basis. US and Canada up 9%. Europe, it was up 18%. Asia Pacific up 4%. Rest of the world up 24%. And we got political ad spend about to come. Remember, the big political ad spend wasn't even in this last quarter, right? This ended in June, this particular quarter. The big political ad spend is July, August, September, October, right? And then whatever last bits these politicians have, they'll run it in November. But it's really those lead up 3 or 4 months before the elections actually come in November. So don't be surprised if this number goes up even much higher in the next couple quarters here. Now, if you look at the percentage basis, revenue was up 22% for the company year over year. That's an incredibly strong number. How many companies, think about the economy, right? Think about inflation. Think about these companies reporting. I look at just a ridiculous amount of earnings reports. I can't tell you very many companies that are growing revenue 20% plus right now. Meta's one of very few. That's an incredibly strong number. And the earnings per share is off the charts, 73% up. Diluted EPS was up, right? 73%. Net income was up. That's extraordinary number. Extraordinary number. Now, before we get into projections here and kind of what I'm thinking in regards to Meta stock, right? If you watch my channel for years, I told you they hate Zuckerberg. Mainstream media hates Zuckerberg. And so if you wonder why they like to run with a lot of negative headlines, they also obviously have turned on Elon Musk the last couple of years. Now, why do they hate Zuckerberg? And why do they now hate Elon Musk? So they hate Zuckerberg because he controls so much of the internet. They now hate Elon Musk over the last couple of years, not just because he went to the right. A lot of people assume it's only because he went to the right. No. It's because not only did he go to the right, but additionally, he bought X. X is a huge competitive threat to all the mainstream media. So is in Facebook, so is in Instagram. For instance, when I heard the news, somebody, I don't remember if somebody, I think a lot of people had texted me, Trump got shot at, right? What do you think I did? Did I turn on my TV and said, oh, let me put it on CNN, MSNBC, Fox News, NBC? No. You know what I did? I went on my phone and I went to X. Because I knew, boom, as soon as I pull it up, I'm going to be able to see the shooting right there. Sure enough, I saw it, right? That's a problem for mainstream media. It's a huge problem. And so this is why they hate Zuckerberg. This is why they try to dig up any dirt, or if they can pitch something as a negative, they're going to try to pitch it as a negative. And this is why they do the same to Elon Musk now. Elon Musk used to be loved, right? But now he's a competitor to all the media out there, right? If you aren't watching Fox News, if you aren't watching CNN, and you're using your time on X or Facebook or Instagram, it's a problem for them. Now they don't make as much money, right? But you know who does make money? X makes money now. Facebook makes money, right? Instagram makes money. It's a problem. Now, let's talk about some projections here. It's very important for everybody to understand why certain things are pitched certain ways, okay? Very important everybody understands that. So here's some, listen, the company just grew revenue 22% and 73% net income. Let's assume they could keep that up, which they're not going to be able to, okay? But imagine they did. If they could keep up that pace of growth, this stock, if you valued it somewhere between a 20 and 30 PE, would be somewhere between $3,200 and $4,800 in 2028. They're not going to be able to keep up these sorts of growth rates they have going on right now, but it is extraordinary to think, like, what if they could, okay? What's realistic growth rates I see for Meta, and kind of where do I see the stock? Well, Meta's Mr. Easy Money. This stock's easy money. I've been calling the stock easy money for years, and sure enough, it's been easy money since like 2018, right? Like every dip's always been a buy in Meta. Still to this day, every dip's a buy in the stock. Every one, okay? Revenue, I have them doing about 15% on average a year, which puts them somewhere around, we can call it a little under $300 billion of revenue, 2028. And then I have them doing about 20% net income growth, which obviously is a crazy deceleration from where they're at right now, which is 70% plus. I think they'll even out to about a 20% on average a year for the next many years, which puts the stock somewhere between about $750 and about $1,100 come 2028. That's why this stock is very, very easy money, right? Because those aren't even wild projections. I have their revenue being down considerably from where it's at. I have their net income being down considerably where it's at, right? And yet it's still 750 to 1100 plus. That's very attractive for a stock, right? This is what a grade A income statement there looks like, folks. If you want to ever look at a grade A income statement, that's what it looks like. Extraordinary numbers. They keep all their expenses in line in a very impressive way, right? CapEx is something totally different. CapEx doesn't count on an income statement, right? Because it's spending on like infrastructure for your business for the long term, right? So you don't count that on an income statement. That's more of a cash flow related thing, right? This is phenomenal. Their income statement is phenomenal. I mean, just extraordinary numbers this company is putting up here. If you look at their balance sheet, $32 billion plus in cash and cash equivalents, $26 billion plus in marketable securities. These numbers are phenomenal. Now, this is what a number one stock looks like. When you think about what is my biggest position in my portfolio, this is what it looks like. In order to have a stock be a pillar of your portfolio, your steak, your chicken, and then you got your side dishes all around your entree there, you need to have something that is incredibly solid, like phenomenal, like top tier to be that main entree. And that's Meta stock. You got a grade A management team, right? You got grade A business model, you got a grade A income statement, and you got a grade A balance sheet. All in the same company. That is what a number one stock looks like, okay? If you want to build other positions into a number one stock that don't have these sorts of things, you can do that, but you're just not setting your portfolio up in a good position. you can always have those sorts of stocks that still have a lot to prove, right, and might have crazy upside. Have those as side dishes. I have those stocks as side dishes, right? But my main course, where I got the big money, that's got to be on sure things. That's got to be insanely high risk rewards. That's going to be the sort of stocks that I don't care if there's inflation, recession, no recession, I don't care what's going on. These companies are going to be strong. That's Meta. Incredible. Now, what about the stock price? Where are we going from here? So, I got very suspicious on the Twitch live stream today because I looked at options for Meta. And I was on there and I was like, if I was to play short-term options on this, which a lot of people like to play short-term options given the stock's about to do an earnings, right? I said I'd be looking at something like a 475 strike. And then I looked at the 475 strikes and you had to pay $19 for those babies. And I said, And right then and there, I was kind of like, I think they're going to screw everybody. I think the market maker is going to screw everybody in this situation. You got to understand the setup into these Meta earnings. You had Google go down last week when their earnings came out. So Google and Meta, a lot of times these stocks kind of follow each other around. So you had a lot of people, I guarantee you, who were thinking, oh, Meta's going to go down on their earnings. There's been weakness in big tech recently. We had a rally day today. It's going to go down over the next couple days, and I'll be able to make a bunch of money on the put side because Google went down, right? And so you're going to have that put side there, right? And then on the call side, I think you had a lot of people that had the belief I did that they're going to come in with very nice beats, right? And their earnings are going to be very good, and that's going to be a good thing for the stock. But the problem is you had to pay such a big premium on many of these options that you need the stock to be like 5, 10 plus on a lot of these options to have really made any sort of real money in regards to this, right? They might end up screwing everybody over this next 48 hours, where all the put option folks are going to lose their premiums, right? Because if the stock goes up, even if it's up a few percent, if you're out of the money on puts, which you're likely out of the money, you just lost everything. Then on the call side, right? If this stock doesn't really explode to the upside, it doesn't make that 10, 15, 20% move, all these call buyers are going to get wrecked. They're going to get wrecked. You got to understand there's a lot of people today that were buying 500 strikes, 515 strikes, 525 strikes. If this stock doesn't explode to the upside, those people get absolutely wrecked as well, and then both sides are just destroyed. And the only ones that end up making money in the end are the ones that were selling those calls and puts to folks, right? And the market maker in the end, right? And so, I don't know. I just have a funky feeling. In regards to Meta, the stock is heading to 550, and then it's heading to 700. But I wouldn't be surprised if they destroy everybody over this next, 48 hours in regards to the call and put side. Don't be surprised at all. I've seen it happen so many times in the market. It's ridiculous. It's insane. And that's what differentiates me versus somebody else. I look at a Meta and I'm like, I think they're doing $5 plus. I think they're going to beat, right? But I won't go out there and say, you know what? I got to go buy a bunch of calls on this. Let me go buy $5,000 in calls on this, $10,000, whatever. I've been around this game enough to know, there's tricks up their sleeve. This is probably going to end up being a trap, right? That's just my view on that. And I'd much rather say if I'm going to do $5,000, $10,000, I might as well just buy more shares of the stock, right? Because then I'm not caught up into this game of like, oh crap, what if it goes up some? Do I get out right away, right? Or do I try to hold, hope it goes up more, and then it ends up giving back the gains over the next couple of days, and then next week it goes flying, right? And I miss out on the whole opportunity. You got to play it smart. Hey there, it's Jeremy. I hope you really enjoyed that clip here today. What I'm showing you right now is 1000xstocks.com. This is a specific software that has been designed to save you time. It's a one-stop shop for long-term investors to know how the company is doing, listen to what management has planned for the future, and compare companies next to each other. Which big tech is the most undervalued? Is that small cap company you heard of actually worth investing in? Or are there red flags? Get the front row to the conference call, be able to access the management, which information is right to make an educated decision. Get all that information through 1000xstocks.com. You can access that through the description area. You can apply for access to 1000xstocks.com, or you can go to 1000xstocks.com. Microsoft shares slip as Azure revenue growth misses expectations.
They're out. Steve Kovac has the numbers.
Hey, Morgan, I was reading your mind here. It is a beat on the top and bottom lines here. Let me go over what we got. EPS coming in at $2.95. Street was looking for $2.93. Revenue, just a slight beat here, $64.7 billion. Street was looking for $64.39 billion. And then Azure cloud growth, as you know, super important. That did miss expectations here. Street was looking for 30.2%, but they printed here 29%. Azure revenue growth. I'm going to keep digging through these numbers and come back with some more commentary for you guys. Especially important, how much of that Azure cloud growth was related to artificial intelligence. I'll be right back with you guys on that. Back to you.
Okay, and we will come back to you as soon as you have more to bring us. So, Kevin, yes. I mean, right there, you've got shares of...
That's the thing with Microsoft. The numbers are good. They had beats almost across the board, other than this small miss in regards to cloud, right? If Microsoft's such a stable business model, they're not really ever going to blow it out of the water. It's just not that sort of company. It's not like, oh, beautiful hummingbird coming right up to the window. Hi, baby. Oh, man, look at the wings. I mean, the wings are incredible. So, Mr. Softy, like, it's not that sort of business model that's going to blow it out. It doesn't work like that. Their business model is stable, predictable over time, right? And so when they beat, it's going to usually be small beats, right? And if they do miss anything, it's going to be a small miss. So sure, miss, big deal. Like 1%, come on. That's baby number, So anyways, but sometimes these stocks do price in a lot, and I think that's the game of Wall Street here.
Microsoft now down more than 7%, largely on this Azure cloud miss. I mean, 29% represents a deceleration in the growth that was starting to perk up in recent quarters.
It's a slight miss on their Azure revenue growth, but what I will point out is investors need to remember that the AI CapEx spending game is a long game, and it may be years before we start to realize the benefits of all those investments. Microsoft was very early to the game. They continue to spend in the areas of AI. I think there's work to be done on the Copilot side. They have to address security concerns. They have to address a higher price point, but Cloud Azure is going to be their revenue for growth potential for years to come.
Okay, Paul, this is traditionally a difficult quarter for Microsoft if you're just looking at the quarter itself, also the end of the fiscal year, and we're going to get more sense of the guidance on the call. So, I mean, how much does this Azure, you can call it a miss, because certainly the whispers and the hopes were higher. Can AI assuage any of that, or is it perhaps proof that AI can't do everything?
Yeah, I mean, I think, John, what you said is the key point is that this quarter is usually a weak quarter for Microsoft in terms of its earnings and its stock price reaction. It's historically weak in reaction to this July report. Last quarter, Azure was the, stronger than expected. Stock rallied. So this quarter, we're seeing the opposite and the stock's falling. What I think is really interesting that you mentioned AI is ever since the launch of, from 2001 up until ChatGPT was launched, Microsoft, when it reported earnings, had an average move of about 1 to 2% up plus or minus in reaction to its report. Since ChatGPT, the last 6 quarters, I believe it is.
What do you call it?
Its average move is plus or minus 10% or 12%. So it's become very volatile in reaction to earnings during these periods. But the overall trend for the stock has been up. It's just the short term, the market gets ultra focused on the smallest beat or gain because
that's a buy. That's a buy, baby.
There's just so much focus on the cloud and AI here.
Could see some reaction there. Amazon taking it on the chin, another hyperscaler down more than 3%. NASDAQ 100 not faring well as all in reaction to Microsoft being down a little more than 7, Morgan.
Yeah. It goes back to, it raises the question, Kevin, the great rotation.
Yes.
As we've been sort of debating whether this...
So, Amazon, buy. It's a buy, baby. It's a buy. It's a bye. Appreciate everybody joining me as always. Thanks so much for being here, folks. We're busy. It's earnings season, man. The amount of reports I've been looking at the last few days got my eyes going crazy. I think I need some more Celsius in my system. All right, guys, much love as always. Appreciate you joining me and have a great day. Pin comment if you want the access to 1000X or my private group. Take your game up to the next level. Celsius level, baby.